I'm going to show you right now how I trade SOFI earnings without guessing the direction, whether it goes up, down, sideways, literally doesn't matter to me. And make sure you drop a comment down below on today's video. Every single person that does is going to get my earnings season survival guide, a must read if you're a trader or investor, especially going into the deep earnings season that we are in. Drop a comment, and while you're down there, hit that like button and that subscribe button. And of course, I hope you are having a God blessed day. We have a huge earnings week coming up, guys. And what better way to really start off the big one with tomorrow, SOFI reporting earnings. And a lot of people, I see them in the community getting hyped up. Obviously, SOFI has been on an absolute tear here, right? Right now, we just crossed over $30 on SOFI, at least on the pre-market, $29.95 right there, already up 3% here, which is insane. But a lot of people don't realize that you can actually make money, make premium income from a stock like SOFI, especially when it is juiced up the way it is during its earnings week. Now, asterisk, this is a more riskier strategy. All trading and investing obviously involves risk. I know you know that, but because of it being elevated so much so because of its earnings, the premiums that you're going to be getting are ridiculously higher. So let's just talk about the strategy full circle, and then we can kind of talk about the smarter way to actually do things. As you guys know, if you tune in daily here, I'm very risk averse. I don't want to go into the unknowns, but I also know there's a lot of juice to be squeezed, especially during these unknowns, right? So let's go over the shoulder, guys. So right now, obviously, we see SOFI has earnings. We're going to go over to our Robinhood demo account here. You can use any brokerage. Make sure you're just approved for options trading. And obviously, we see SOFI here. What we're going to do is go to the SOFI options chain. We're going to click sell a put, okay? Now, what a lot of people are doing is they're running a weekly on SOFI right now. Now, we're going to talk about all that here in a second so it all makes sense to you. But all we're actually doing here is saying in 4 days, I'm okay buying 100 shares of SOFI at close on the 31st, okay? So what are the risks here? Well, number one, let's say we said, we'd be comfortable buying it at $28.50. Right? Obviously trading right around $30 right now. If on Friday, SOFI is trading at $28.50 a share at close or below, you're buying 100 shares of SOFI. So $2,800, right? Your brokerage is going to lock up. So let me show you guys what this trade looks like, right? So we're collecting $107 of premium. That's given to us upfront from the options buyer, right? So I'm going to toss this into my cash secured put calculator where we say 107, right? We're locking up $28.50 on that trade. And we're getting a 3.75% return on our collateral here. This is risky. Let's kind of walk through all the risks here, okay? So what can happen? It's actually 113 now. Wow, 113 already. Let's just put 113. So we're right at 4% return on our collateral. Risky business. Let me kind of share with you. So all I'm saying here is on the 31st, at close, I'm willing to buy 100 shares of SOFI if it's trading at $28.50, okay? So your brokerage is going to lock up that $28.50 of your money on your margin or your cash. Everything I recommend is always cash secured, guys. Can't stress it enough. Don't put yourself in a terrible financial situation if you can't afford it. But with that said, if at close, SOFI's trading at $28.50 or below, let's say it's trading at $26, $24, $23 on Friday, right? You're on the hook to buy those 100 shares at $28.50. Now, if it's trading above, let's say it's trading at $30, let's say it's an incredible earnings, far exceeds all expectations and takes off to like $30, $40 or whatever. It's trading above $28.50. You're not buying the 100 shares, right? You're not buying them, right? Your contract would expire worthless on Friday. Your money's returned back to you to then run the play on a different opportunity. So those are two big risks that you have to weigh. But a lot of people do this, especially if they're extremely bullish on the stock, meaning that you believe that SOFI is going to far exceed all expectations, right? Is going to get to tomorrow. It's going to shoot up to like past 30, right? And you're not going to end up having to buy the share. So what people will do is they will, buy a couple of contracts. Right now, my cash secured put calculator, you can just do it right from here, right? If you did 8 contracts, let's just do, we'll just do 5 for simplicity. So if you did 5 contracts here, that would lock up $14,000, but you collect just, over $565 of premium income. And if the earnings are really, really good tomorrow, you usually can close out your position early too. So let's say that tomorrow at earnings, let's say you opened a position like this. And obviously, guys, not financial advice. Go speak to a financial advisor. All those premiums are obviously constantly changing. But let's say tomorrow SoFi took off. It's trading at like 30, 35 or something, right? And you're saying you wanted to buy it at 28.50 on Friday. Well, your contract will essentially start becoming worthless even sooner, meaning that you can actually close out your position. You could actually close out your position early, right, before Friday. Sorry, guys, I have something in my throat. But with that said, right, you would have to give back a little bit of that premium. So if you did like $113, you might have to give back like 10, 20 bucks, but then you get your collateral back and you're in and out of a trade in literally a day. This is more of that dopamine option selling, I like to call it. Me personally, I don't like to do this kind of risky strategies, right? Me personally, look, it's already at 128. So with that said, I usually like to run monthlies for that reason, especially kind of not playing around with earnings season. I'm going to be honest with you guys. I'm not one of those people here on YouTube that's doing these degenerate kind of plays, trading weeklies on a stock during earnings season, but I see the appeal to the degenerates. What I like to do is I like to go 30 days out, so time is on my side. So right here, look, if I did my 28s here on SoFi, right, just 28s, not even 28.50, my 28s for November 28th, which is 32 days away, I would collect here $160. So I get a bigger return, right? But look, what did I say? 160. Look at it. Actually, I'm going to copy and paste this just to show you what an earnings week can do to your returns. It's quite insane. When you're trading during earnings, how much juicier your premium is, right? Look at this, right? So here we're getting 113, a 4% return in a matter of what, 4 days? Right? And this one is what, 32 days away, a 5.71% return on our collateral. Obviously, results vary 100%. And also, I didn't mention, if you want all my calculators and stuff like this, second link in the description. Plus, you'll get the full Ark Options Strategy training workshop as well, so you know how to do this stuff for yourself. But this is why earnings season is oftentimes burns a ton of people, right? So me, I usually stay away from it. I wait until the earnings actually happen. So what I'm doing, because I really want to get back into SoFi. Right now, I believe SoFi, and you probably should too, SoFi is priced for perfection, meaning that even if it has a fantastic earnings, right, if it doesn't far exceed the expectations, even more so for investors, the stock may come back down. So me personally, selfishly, I want to see a pullback. I want to see a big pullback, right? And we did see slight ones here on SoFi. We saw slight ones where we dipped below that middle Bollinger Band area. And if you don't know these technicals, this is called the Bollinger Band. And if we look at it over time, we usually hit the top, retract, and we're usually kind of in the middle. Sometimes we jump above it, then we kind of come back down. Now, all indicators are Fugazi, guys. It just helps us time our trades to maximize our premium and strike price, right? So the way I like to do it is if I'm trading towards the top Bollinger Band, that's where I want to be selling my position, right? Because usually we start working our way back down. I can close that covered call out and move on to the next opportunity. And then my cash secured puts, I like to do at the bottom of the Bollinger Band, right? Because usually they bounce off. I'm not taking assignment, and I'm able to get in and out of a trade fairly faster. So for me, I want to personally see a pullback on SoFi. If we work our way back towards 25, which I believe is still crazy. Me personally, I've loved you guys know on the live trade log, like, man, we were doing this at the end of June when we got finally, we rolled our position, actually sold our SoFi shares for $17.50, which is crazy, man. How fast this stock has been absolutely moving here. But with that said, eventually I believe there will be a pullback on SoFi, and that's when I'm personally going to be jumping back in. Do I think it's going to be this earnings? I don't know. I think especially with them releasing options trading, and they make that more publicly accessible, they're going to be able to do your basic covered calls, cash secured puts soon across the board. I think that's going to change the game if they do it right. If they're paying interest on the collateral as well, dude, that is going to be huge. I would most likely move my entire portfolio to SoFi if it checked all those boxes for me. So it's hard for me to bet against SoFi because I actually have them in my buy and hold portfolio. But man, I really hope to see a pullback here at some point because I want to jump back in with my cash secured puts and really start running the Ark Options Strategy, then the wheel strategy, and looking for the 20 puts. I really want to be get puts at 20, especially on a stock that's been flying high like this. You know, I've been investing now for a very long time. I've just seen this time and time again. So it just worries me a little bit, kind of going all in. Like you're seeing so many people like on YouTube talking about, just YOLOing and doing buying calls on SoFi and stuff like that. It scares me, right? It scares me, especially since it's actually earnings week as well. Guys, I hope you enjoyed today's video. If you did, make sure to hit like and follow. If you want all my calculators that you're seeing on your screen right now, my trade logs, and a 2-hour training on the Ark Options Strategy so you can start collecting premium from the market, whether it's going up, down, or sideways, click that second link in the description of today's video, guys. And remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.